Hey out there, it's Monday, March 7th, 2025. I've been getting lots of questions about these tariffs that went into effect last week and have affected the markets. We've seen the US stock market just in free fall since these things have gone into effect. And I wanted to discuss what is going on and how it affects you and your mortgage interest rates. While I am not a financial planner or financial advisor, it is my job as a mortgage broker to keep up with the markets and the rates and what's happening. So I'm going to try and explain it here as to what's going on currently. Okay, so the tariffs have gone into effect. And when that happens, investors have uncertainty as to what's going to happen. So they can't plan around what businesses are going to do or how the cost is going to affect them, because just because there's a tariff in place does not mean that the sellers are going to increase their costs to buyers. That they don't have to do that. That's not a requirement. They can eat that cost if they want to. But we're talking about investors here. They do not like uncertainty in the market. So let's say that you got into the market and they spent $100. All right. And then the market increased in value and it went up to $150, $200. Let's just start at $200. All right, so now they're thinking, I've made 100%. I bought it 100, now it's worth 200. But these tariffs have caused that investment to go down to 150. So what the investors are doing is selling. They're getting out. They want to lock in their gains and say, I'm going to sell now. I'm not going to make the 200 because that's already gone. That ship has sailed. So what we're doing is we're selling to lock in that gain. But they need to park that money somewhere so it's still doing something to make money. One of the ways they do that is they invest in the US Treasury bills, or T-bills. It's a 10-year Treasury bond that's issued by the US government. That's how they finance the currently $37 trillion worth of debt we have. Okay, so the more people that buy these T-bills, the government's not going to continue to pay the rate of interest that they have been paying, say around 4.15%. The more people that buy, they start dropping the rate. So they say, well, we're not going to pay you that much interest. Now it's gone down to about 3.9% and it's continuing to fall. In broader terms, that means they're going to be able to renegotiate whatever 10-year bills are coming due now at a lower interest rate. T-bills they don't directly affect mortgage rates, but mortgage rates follow them. So as the Treasury bill interest rate starts to tick down, the mortgage interest rates start to tick down. So that's good for us here. On the flip side of that, though, if the importers or the products that they're bringing in, they decide to increase the costs of those things and pass it along to the buyers, let's say material costs go up for home builders. Well, then that means that it's going to be more expensive to buy or build a house, thus being more expensive to buy the house. So the price of a new house starts to go up in the event that they pass those tariffs along. It's not guaranteed. The other thing that happens is we have a lot of borrowers that have been sitting on the sidelines. I have several that are pre-approved right now, but they want to wait for interest rates to go down. I've been talking about this for a long time to my borrowers, anyone that listens, so this is going to be my first video on it. Just because the interest rates are up does not mean that you're losing out on a deal here. Here's what I'm saying. When the rates go down, all these people sitting on the sidelines are now suddenly jumping into the market. So you may have someone who's looking at a house going, I don't really want to pay that kind of interest rate for that house. You know what? That house is $400,000. When interest rates get down to about 6.25%, that's when I'm going to go in. I'm going to make my move then. Well, there's a lot of assumptions there. You're assuming that when you go back in, that you're going to be the only one going back in. And that those sellers who were only had you or someone else looking at their house now have 10 people looking at their house. Beforehand, they were willing to offer seller credits or concessions to help you pay for all of the closing costs and the cash to close. It's going to be necessary to wrap this deal up. Well, now they can say, whoa, we're not going to do that anymore, because they're going to look at the offers that are submitted to them. So now it was just you and them negotiating the price of the house. Now there's going to be you and 4 other people making offers on this house. And the other people may say, we don't need any seller concessions. As a matter of fact, if you want $400,000 for it, we're willing to pay you $405,000. And they're going to pay $5,000 over. Well, if the house gets appraised at $400,000, they have to pay the extra $5,000 out of their own pocket. The lender is not going to lend more than what the house is worth. That's not something that they do. So now you start getting into bidding wars for these houses. So instead of this house being at this price that you wanted for this interest rate that you were waiting to have happen, now that house is going to cost significantly more money, and there's not going to be any concessions. So just keep that in mind. That's just kind of the seesaw effect that happens out here. So in essence, if you see a house that you want, you can't, pick the house up and move it to a different location unless it's a double wide or something like that, but then you can't even get financing for it. The point is, buy the house you love that fits your needs. That's what you're looking for. Negotiate the best deal you can. If you need seller credits and they're not willing to give them, then you might have to find something else or see about getting gift funds from a family member or somebody to try and help you get into that house. But get the house. Then when interest rates go down, like they always do, at some point they're going to go down, then renegotiate. But if you can't afford it going into it, then you don't need to be looking at that house. That's why you need to get pre-approved. So contact me. We can start on your pre-approval process and get you ready to, when you jump in, you're ready to go. The other part of this is that I've been saying several times now, and there's an entire video on it. It's about optoutprescreen.com. This is the do not call list. When your credit is pulled, the credit agencies will sell your information, and you're going to get your phone and email and text blown up with all these telemarketers hitting you all the time, trying to sell you whatever in the world. So go to optoutprescreen.com, opt out. You can do the electronic opt out. It takes 5 business days to go into effect. And so that's a delay right there, unless you just want your phone to blow up because you're in a hurry, which that's up to you. It's your call on that. But I recommend getting the 5 days set. And during that time, we'll work on your pre-approval process. We're just not going to pull credit yet. As soon as 5 days are up, we're going to pull your credit. And then you're going to avoid all that headache. And we're going to have you ready for, this is how much house you can afford. This is how much you're going to need to put down. Do you need help with closing costs or cash to close? If not, great. You're in a great financial situation. Not everybody has set money aside. But if you need that, we know that we can talk with the sellers about, hey, we need this, if they're willing to negotiate on that. But these lower interest rates are going to put more people in the market and cause sellers to say, yeah, we're not going to do that. So lower interest rates does create more of a seller's market. Right now at the higher interest rates and coming out of winter, which is a slower time of year, that's a buyer's market. So we'll see how things go. These tariffs are going to be in effect for a while. Depends on how the negotiations go with the U.S. government, but we should continue to see rates drop. Plus, the Fed has announced several rate increases coming up this year, so we'll see how that goes. I hope this was helpful information and that you learned something from it. If you have questions, you can reach out and ask me. I'm always willing to talk, and I'm generally always available, even in the evenings and on weekends most of the time. So that contact information I have is in the information in the description below. And if you want more information on the opt-out pre-screen or why I recommend the $5,000 for a first-time home buyer, you can click on any of the videos. They should pop up here. Just click on one of them to follow me. Anyway, I appreciate it. I hope you have a wonderful and blessed day, and thank you for watching.